All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for November 6, 2023. We'll start with the 30-minute charts. Alcoa. Multiple days open on this one. It started rolling over. The market rolled over. Took the exit as it was coming out of the dragon to lock in about 3R. No trades the rest of the day. AI is going to be the sniper trade of the day. It was certainly in play from Thursday. This was a big gap up here, and it started collapsing immediately. So we ended up getting short for a sniper trade of the day on the 3-minute. We'll see in a little bit. Cashed the swing trade here for a big payoff, and then initiated a swing short here, well into the pocket, which closed. We closed it out after the R10 rolled over. No overnight risk. Standard risk box on it for 3R. Amazon closed out a 4-day grinding emerging dragon for about 4R. It was coming all the way back to the Bollinger Band mean, and it was narrowing. Didn't look like it was going anywhere. Felt like a natural exit. Caterpillar had 2 positions long. Closed it after a gap up that rebounded off of the actually went through the PSAR and reversed, came out the bottom of the dragon, so we exited that one for about 12R. Cliff initiated a COTA 2, holding that one with about a half an hour in hand. I don't feel good about that one, but we'll see. That has nothing to do with what it'll do tomorrow, we have learned. 1R in CVS on a COTA 2, really just went nowhere. Dish Network, the nice run up of the last 5 days. Felt like it had peaked in here. Today it continued to collapse. So after the PSAR and RL10 coming through the dragon, got short. That's about 3R. But the last 2 hours were just sideways, kind of choppy, and holding support here near that gap, so that just seemed like a natural place to exit. Dish, big gap down, and then on the continuation failure, initiated the short, and that one closed. The bottom just fell out of this thing. 2, 3, 4. That's about +4, and it closed at the bottom of the day and the bottom of the 30-day and 10-day look-back period. So this thing is just cratering, and we'll hold that one more day. Devon Energy, standard COTA 2 to the downside. So we had big run up, first leg, second leg. That one felt natural short. Across the Bollinger Band mean, it's below the VWAP. Heads into the winter on the second leg down. This is a 1-2 retracement exiting at the skin of the dragon. May have given back too much on that one, but still. We'll take, that's 3R and no overnight risk. And this is postured to fail some more tomorrow. So Devon Energy, we'll watch that one if there's any weakness in energy. Electronic Arts collapsing into a really tight compression zone. That should be getting ready to pop. You know, you got these big moves and then diminishing chords. And then the first sign of upward pressure in the last 30 minutes. So if we put a tight risk box on that and call that the 0 state, we should be ready to trade that one in either direction tomorrow. And we could see these big gaps and goes or long continuous moves down like we've seen, but this is like a coiled spring compressing into tomorrow's move. So we'll see. Emerging markets, tried the gap and go. This thing gapped up, kind of went sideways, and then started to take off and failed. So we took the -1R loss. Really went nowhere. Ethereum, basically a scratch trade, a gap and go that then failed, came back through the VWAP, and when it did that, we took the 1 bar low. Mexico tried to caught a 2, it really went nowhere, and then there was a little spiky downward move, and that ticked us out for about 1 hour loss. Mexico, or I'm sorry, that was Mexico. This is Brazil. Brazil, we closed that long grinding move. Really, from about here onward, it's done nothing but just stabilize. And rather than face one more day with the potential for an adverse gap, this one just felt like it was completely satiated. 8, 9, that's about 10R in 4 days. We'll take that. And this is setting up for a hybrid frog breakout tomorrow in either direction, and we'll follow the price. Just no overnight risk. Intel, basically the same trade. That's also about 8R. And that's just a grinding upward tech. And it was coming back into the station. You can see it's starting to compress into the Bollinger Band mean, so that was enough. IP, we reversed the that long upward grind, took the PSAR flip short, cashed about an R. IYR, same trade for about an R. This is real estate, no, Coca-Cola, excuse me. Friday we closed out that long move. No trade today, it's just stabilizing after that nice long run. Real estate, we closed that one Friday, just really ground into a sideways chop here. That is also setting up nice. I like the fact that it's below the Bollinger Band mean, and the Bollinger Band mean, the river itself is starting to roll over. You already got the RL30 rolling over, the Dragon is rolled over, now the river is rolling over. It's in winter, and that's really, and it's below this gap level, so I would not be surprised to see this on a sharp move down to 42, the peak here, and then it could actually get below. If it breaks below about 41 and a quarter, that looks like crucial support, and then it's down to this support level and then back to fair value. So there's actually a really long trade to the downside that starts with a violation of today's low. Now this held, but if that breaks, then we got to be ready for that kind of move. Mattel, we closed an R. Today was just grinding downward. There was no compelling buying interest, but it did not collapse. So this one is intriguing after that big harsh sell-off down to here, and then the rapid recovery, and then grinding upward. That feels like the end of it, and now it's really looking for its price discovery. So yeah. McDonald's. The gap and go from 3 days ago, this is Thursday morning's trade, is still active. It held pretty well all day today. That's pretty stable. And it's only because it's McDonald's and not tech, and it had been beaten up quite a bit. Am I willing to hold this? That still feels like a value play. We may see some more buying pressure tomorrow, but I kind of like the cushion. We have about 4 hour cushion in that one. mark. 1R in the usual way, Kata 2. Microsoft. Have that long grinding tech trade from last week with the first entry, then a second entry, and this thing just continued to grind until today when it just kind of ran out of gas. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 on this one, 3 on that one, so that's 13, and we'll call it a day. That last little bit, a little spike up means nothing. We'll see what it has tomorrow. The market is digesting last week's great gains, which come from the Fed selling a lot more treasuries than had been expected. So we'll see. I think that's a perfect zero state there in Microsoft. Marijuana, no trade. Nvidia, we closed out. That's part of that long tech story. We closed that out when it hit the PSAR in the midday. There was just no further buying pressure. So raising cash. Clean energy took the owl short, standard risk, 2R, standard exit. Rivian, no trade. I just missed the downward rollover. Tesla initiated not initiated short. This was the compound trade from last week. We ended up getting 3 positions in, took off 2 of them after that spike and then failure. So we took off the 2 last entries and we're keeping 1, and then that just didn't go anywhere. When it hit the Bollinger Band mean, it was setting up for a collapsing drag, and we just exited the final position on that one. Ventured a little bit. Ventured on U.S. Steel on the emerging dragon. It really went nowhere, so scratch in the afternoon. All right. Sniper trades of the day. So this is 3 minute. This is an AI. This was Friday's close. That's the size of a reasonable risk box when there's no price action at all. That's just the algorithms trading back and forth. And that's pretty close to the size. That's about a 21-cent R10. Now, this one was the biggest gap up. It rolled over quickly. It moved a risk box off the top. I shorted here, looking to get 2R, 3R back to the midpoint. And that thing just collapsed like crazy in that first bar. After I entered it, that first this actually was in the first 3 minutes, and then that first 3 minute bar looks like this. When it broke below the shelf, and we were holding probably 4R, second position. If you decide to take it off right there, I'm not offended. Like, that's a reasonable exit. Because that would be 7R on the first one, 4R on the second. So you're holding 11R there. And if you decide to exit here, that's fine. I treated it as market's money. What were the clues that suggested shorting AI at the opening gap up? It was the biggest gap in my entire stack. It had a enormous gains over the last 2 days, which are probably unsustainable. It's in play. It's been in play all week. It was my number one priority going into today, as I talked about last week. And the clue is that it moved an really the MMRB. Here's where it opens. It moved up, not even an MMRB, then fails an MMRB from the top, and it's a 3R trade to close the gap. I mean, that's all you need. That's a hybrid frog entry. You don't need any more signals than that. The thing is in play. It's the number one stock in my entire portfolio that's in play. And it moves like this. What were the signals? This is what it's done the last 3 or 4 days. Gone from 23 to 29. That's a 25% move in 2 days. A failure on that one is not surprising. Look how it moves in the opening bars. It's tailor-made for that. So you're holding 11R right there. If you got out there, then you got to get back in at that one or add a third position. And then this one just smashes. So the first position, 1, 2, 3, 4, is 11. Second position is 1, 2, 3, 4, 5, 6, 7. Third position is 2. So that's 20. And then it was lunchtime. The central idea of a hybrid frog entry is at the open, when the market opens, it is simultaneously the high and the low of the day, and it can move a range stat to the upside or a range stat to the downside. And if you put an MMRB on either side of that and then play the breakout, that's all you need. And then when you notice that it's the largest gap in the entire stack, then a large gap indicates a potentially large move. So those are the ones that you want to trade in this style if you're trading this style. The last 2 days, it's had a 25% move. It moves huge in the opening 30 minutes. It was the largest gap up today. That's opportunity knocking. So you put a MMRB on it and go. Now, I show you that one on the 3-minute chart. This is what it looks like on the 1-minute chart. The 1-minute chart, it gaps up to here, doesn't even move an MMRB off the top. I mean, from the open, it doesn't give you an MMRB move, but it gives you an MMRB entry from the top if you're going that way. I waited for it actually to go below the opening. And so when I entered in here, it was a new low of the day, and it was a 2R move back to the Bollinger Band mean, yesterday's close. That's the reason I'm in. It had moved one MMRB off the high of the day, more than, because it was really like 1.5, but it went below the opening. So I enter here looking for 2R. It blasts through that. It goes 1, 2. I'm holding 2R with momentum. That's the 2R battle drill. So nothing special. And then this thing collapses to here. And that's the 4R battle drill. Nothing special. It gets to here. And that's on 1 minute bars. That's 20 minutes in. And the first position is holding 6. This one's holding 4. And that one's holding 2. So you're holding 12R 20 minutes into the opening. Hybrid frog technique. That was the second version of. If you were just trading the 1 minute, it looks like that. Now, I want you to notice that if you trade the 1 minute bars, then you're kind of a maniac. But you got 12R en route down to 27.50 on the 3 minute bar. Let me try to open that up. Yeah. On the 3 minute bar, that thing goes down to 26.75. So this was really, if you were trading the 1 minute bar, it's really, it's this move. Because that was enough on the 1 minute bar to get you out. But that was 12R on the 1 minute bars. If you're trading the 3 minute bars, that's not enough to get you out. And if this does get you out, which I'd understand, you got to get back in right here. Because now you have this collapsing dragon, and it gives you a 1, 2, 3 entry on the downside. And then it follows through here. And then you could decide, is that 1 position or 2 positions? I would make it 1 position. No hurry. So in our repertoire of systems, that is day trading, hybrid frog, 1 minute chart. The other one that I showed on the 3 minute was an OR3, kind of like a sniper. Although it really had a hybrid frog technique in it too. If you wanted to just trade the OR3, what you end up getting is, excuse me just a minute here. Let's see if we can find that. Is it this one? No, sorry, wrong one. If you trade the OR3, then you start off like this, and you wait for the OR3 to close, and then you enter in the next bar, so you don't get that first one, but you get this one with a wrist box like right there, and then your 2R battle drill is approximately here, 4R battle drill there. So you still get 3 positions in, and instead of 20R, that gives you about 18. So choose your weapons. Oh, the other reason not to get out in the middle is that the RL10 slope is still downward. It hasn't rolled over and come up yet. And that's still just the first leg. But you could do it on a money management exit, and you'd be happy with that trade. You know, you decide. All right, Brian, on the Kiwi, 5 minute, the entry should be here. I think this is when he's available to trade. So he takes it as a Z3 pinch. I would probably also call that an emerging dragon. He gives back 0.3. I think this one would have been interesting because now you got a lower high. I probably would have tried that one and scratched. I might have then tried that one again because it's an owl. And then exit somewhere in here. I think that one was reasonable. And for those of you that can stay in the market longer, there's your Kata 2. Lower highs, breaks right here. That's like a combination. Collapsing dragon off that one. Then you get a collapsing dragon in here as confirmation. Wow. You might have waited for that, but man. After 1, 2, 3 runs to the upside that all failed. You know, this one failed, that one failed twice, this one failed to here. That looks really attractive to me. This is Hamad. PSAR flip is here. We might have gotten that one. That's the Bollinger Band mean break. So, I mean, that's still pretty good. You get 1, 2 in your favor and then reverses up. It's hard for me to hold that long. I'm sorry. Let me back up. I missed one. I didn't see this. Kind of an emerging dragon. Yeah, I like that one. On this one, this is where I want to get short. So it's hard for me to hold past that, especially when it's breaking the Bollinger Band mean. This is supposed to work. Maybe the Bollinger Band mean is the indication. Still reasonable. 1, 2, 3 entry would be here. PSAR break is there. I like that. Second position. I think you waited too long to get out here because you only capture that much. I think maybe I'm here. On my best day, I can exit at the bottom of that peak excursion, and I can exit here or here. Still, that's pretty good. We could live with that. If I can get into the zero state there, I've got the RL30 rolling over, the dragon rolling over. That makes this an owl entry. And then if you have that, then you're getting out right here at the edge of the dragon. And on this one, I don't. I would rather see you scratch that as the Bollinger Bands are compressing, and this is supposed to go all the way down to here. That's where we really want that to go. When it doesn't do that, maybe I can get out here instead of here and save half. And then I might have actually, then I probably would have gone long. I think you stopped and reversed in that page a little bit. So just consider that. Consider the owl and watch those. Um, there's something not right on this. Hold on. Double check your score, your color coding on this. I'm only seeing red and yellow, so this should be the fall because it doesn't go into the winter until you get below the 0 line. I'm not sure you have those settings right. Take a look at that. That's not looking right. All right, Tesla. There's the close, big gap up. This is a new low of the day. Maybe coming back to it closes the gap. This is still reasonable. This comes to here, and you exit here and get paid. That's positive. And then you're in the 0 state. We get this. Again, this is supposed to go when that rolls over. That's only a 0.6, but it still feels a little excessive. And the reason I say that is if I've got this, this is going to be my collapsing dragon. So that's a place where if I hadn't taken any trades in there, then I'm actually looking to get a K2 to the short side. So yeah, I guess that's a good exit. Yeah. And then you did take the kata 2. Okay, I like that. And then there was just nothing happening, so that's a good scratch because you're in the Z3 pinch now. And then this is a Z3 pinch breakdown. I think that's premature. That's getting the second position in on 1R, and that's not a 2R battle drill. So I think that's premature. And the only reason I think you get out here is because you have that second position on. Because you still picked up the correct bias that you were short. So if you don't even take that trade, I think you end up staying in that whole thing and then exit here. This is a great re-entry. I think your 2R battle, you're getting second positions on too early. Marijuana. So here's our Z3. There's a Z3 breakout in here somewhere. Oh, and this, okay, that's the OR3. Got it, never mind. So your opening is here. And long here, cutting it there for half an hour. That's reasonable. Now, when this fails and this rolls over, that's kind of prime time short right there with a wrist box to there. And then this is confirmation that that short was good. And then this is a great exit. And I like that entry. And on the second test, I think you got to get out right there instead of here. If that caught a 2, no, okay, that's a Z3 breakout. That's reasonable. When that doesn't go, you can get out at the anywhere on the Bollinger Band mean. And then when that fails, that's like a fake 1 go 2. So I like that as a short. And then this is the exit. So there was maybe some micro improvements in here. But to be honest, there was just not, we did not see the big move in MSOS that we normally see. So maybe they're getting bruised. That's a couple days in a row. It's not really done that. All right. This is Tesla. Gap up, sells off, plays that kind of like a intraday morning hook, and he has a excuse me, sees the beginning of that summer, gets paid. I like that. That would have been really tempting as the short because you have this run up and then a big collapse. It's a new low of the day. It's breaking the PSAR. You're looking for it to get back to the previous belly. That would have been tempting. This was tempting. I think you got to scratch that instead of this. I think you want to be short there, or short here, or short here. Offline for appointments. Okay. Sees the double bottom. PSAR flip. Second position. Looks good. This nets 2R. It was plus 1.2, minus 1, plus 1.8. So it nets 2. Good job. Grinding, but staying focused on it all the way through. I'm going to try to do a quick stream of consciousness. Z3 breakout, good cut, good reentry. Second position, cut, reentry. Get paid on that instead of scratching. Pretty good entry. The ideal was a break, but that's so close to perfect. That and then the reversal, edge of the maybe a bar late. This is late. This entry should be here. And then this pays off a little bit. Quick cut, quick cut, quick cut. Maybe after 2 I don't take that one. But you're on a roll. That one's definitely the fourth one you don't need. And then we should be short on that one. Breaking of the Bollinger Band main. Second position, good exit, good reentry. You should scratch that. I'd take a break. Z3s come back and pinch. That's worth a shot to the upside. Stop and reverse there instead of waiting for that. But that's a collapsing dragon. That's good. Entry here instead of here. All looks pretty good. Almost 4R. Hydraulic trading. The afternoon was better in the pound. You're keyed into the grinding downside. You weren't trying the long side trades. You're riding the larger trend line. Try putting the 90 on that one. You might want to look at that too. Although the slope of the arc maybe this is a better idea. Just make the RL30 thicker. Um, yeah, that's that's yeah. We don't need that one, but that's so good getting two positions there. That breaking of the 30, that's almost like a collapsing dragon on the 30. So I think I'd make the RL30 thicker so that it reminds you to stay in tune with the direction of its slope. You did a real good job of that in the afternoon. This is a quick short here and a cover for point 2. Net's 1.6 for the stocks. The Forex and stocks was 5.4. Again, you can make a living on that. Just getting what you can carry. The rest of the stocks were similar in that sense. Getting paid quick. Getting paid quick. When it doesn't fail, you're getting paid. Yeah, a little sloppy. That's all right. All right, I gotta. Okay, so this is Kurt. Here's our opening. High of the day. Lowest support of the day. That's a great short. Covers. Tries the long side. Cuts it. Gets short here. That's pretty good work. That's so good right there. Being able to see that. And then when you see that break, what you're looking for is that next lower belly of the dragon or the RL10, and then those become the downward targets for this trade. And then if this had broken through, there's no support anywhere in sight, so you got to look at that one as the key support level in order to anticipate when the next catastrophic move is going to be. Guys are doing good on that. Should have started that years ago. I like this one. You know, you're seeing these keys. This is kind of a kata 2. You're front running that move. So when you get this and you wanted to get paid, that's your re-entry because now it's officially. I mean, you took the speculative one. This is the official one. That's the real true collapsing dragon. And on the first big bar down, you're not going to lose money on that one. And then the next collapsing dragon here. Yep, I like all that. Just wondering where we are on this move. Okay, come to here. So we're short. Hey, that's right next to the VWAP. So if that short is going to work, then this must collapse right away and break through there. As soon as it doesn't and it comes through the dragon, get out. This is supposed to fail. Because if you hadn't taken that short, and you saw this move and you go here, the price you want to get in as the highest payoff, greatest long side trade is that entry right there. So if you get short here, this is supposed to fail right away through the VWAP, through the Bollinger Band mean, and then the distance that it was above the Bollinger Band mean, that's how far it's supposed to fail to the downside, all the way back to here. So when this doesn't fail, cut it and get long, because now you're tapping into the same energy that was doing this. And then this is a pretty good exit. The owl entry doesn't hit until on the short side till about there, as it crosses the Bollinger Band mean, which is rolling over. Make that thicker so you can see that. And then I'd be short here. I'd try to be short there, but I'd be short here because you're breaking the VWAP. And now you think it's going to come down back to here. This is not a Kata 2. Reason being is that that support level was higher than this one, so you've got a downward trend. That's not a Kata 2. This is a good short, because that's, I'd call that a collapsing dragon on that. And again, this is supposed to fail. It didn't. As soon as it comes through the VWAP, I'd be getting out here rather than there. And I'd be long here with your wrist box like that, and you might have gotten paid in there. Really, I'm concerned about missing these, because this is EWW, and you're trading 1 minute bars. That's hard work. If you're going to trade the 1 minute bars, then you almost have to be locked into the MMRB on either side of the entry, and then you end up getting your entry down here. 1 minute bars is hard. I'd be looking at threes, to be honest. Because that 1 minute bars kills your span of control for anything else. And this one here on IYR, where are we? This rolls over. That's a great short. Oop. Great short. Good exit. I'd probably try this one short again, but none of those. That's a good job staying out of the chop. Then what you do while you're watching all this monkeying around, you're watching the VWAP. None of those are worth taking until they cross the VWAP, and then you can get on them, because then you think it's going to come back to here. So that VWAP acts as a lid on all this monkeying around. So that's great not taking those trades. I still think 1 minute is too quick. But if you are going to trade the 1 minute, then I've got to say, where are we? And this is the afternoon trade in EWW. Not trading at that time. Okay, fair enough. Three minutes or 1 minute is too fast. There's double bottom, PSR flip. It's too fast. Too noisy. It'll burn you out for seeing everything else that's moving. I mean, it's great if you're on the thing that's moving, but it's tough. Dan, let's see. Intel swing trade. So let's see where we're at here. Okay, 7, 6. So the swing trade initiated here on 11-2. Hybrid swing entry. Yeah, emerging dragon. Kata 2. I like it. End of day turbo exit here. Maintained the core piece and exiting here for 1.3 and 0.7 netting 2. Good stuff. This is on dish. On the 3 minute bars. Come on, dummy. OR3. Here's the breakdown. It's below the VWAP, which is here. And that's part of the, this is really good. Placing that alert below the shelf. Everything is below the VWAP, so it's pushing everything down. And then when the shelf breaks, mayhem ensues. Meanwhile, you got a little taste of the OR3 twice. This would have been tough for me to avoid. The recovery there, I think because you wanted to get paid. Just get in. Don't worry about that. Get in. Pay the 3-cent difference on slippage on the market. Just get in. Second position could have been short. So potential in here for 7. And actual was 2. Still really good. We'll take it. And then when you dial up to the 30-minute perspective, you see that breakdown, and then it just hold all the way through for potential 7. So learning that relationship between the 7 and the 3. The 150-day look back. So this is the 150. That's this big purple box. 150-day high. 150-day low. We came dangerously close. This is what the last 6 days have looked like. Today rolled over. It still closed pretty well, but it did not get through the peak of the RL10. Which is the 30-day high, and this is like the day 1 of the pause. Is this the Kata 2 that refreshes, or is this the return back to the Bollinger Band mean? This is where the smart money is. This is where the opportunistic money is. What causes the most pain? That sell-off for all the optimists that bought or getting ready to buy on the way up. So. It's easier to see that roll over here. Could not make a new high. It closed pretty well, but this is very vulnerable because you got that gap, you got this gap, and unless new buyers come in, that starts to evaporate, and then it comes back to the Bollinger Band mean at 425. So that's the trade. This breakout, sure. Then your target is up in here, 445. Still a very tactical market. Almost no volatility today, but it has come back into the station at the Bollinger Band mean. So this is a perfect compound critical state. Tomorrow is turnaround Tuesday. We could equally likely to see a large move in both of those directions, or in either one of those directions. Prime time trading day tomorrow on election day. Bullish volatile, abundant recent strength, handful of breakouts to the upside, only a couple, very few auto framers. Everything is fully valued. Where was strength today? Apple, Microsoft, Nvidia. Strength was in, hard to see. Let's see. Emerging markets. Not much happening in the big indexes. Sorry. Just a few daily squeezes in energy. A lot more squeezes today, and then when you notice that SPY was big time squeezed, And McDonald's, I like McDonald's, but treasuries, the Qs, diamonds, and technology, all these are squeezed. This is market is in a wait and see. They're waiting to see where the next wave of buyers is. If they don't come in, that starts getting vulnerable. So let's be ready for sharp moves in either direction. Lots of summertime stuff that's going to have to be preserved. I'm more worried about the downside, to be honest. And there was quite a few things beginning to show their weakness already, in spite of the fact that there was some strength in tech and IBM and Microsoft. The old school tech, I think, is the safer play. Standard work on the frog list for trading value. All right, let's be ready to get them tomorrow, fellas. Good work today.
Are you there?